Welcome to Tony at 12. I'm Tony LeBlanc, and today I'm in conversation with Toby Birch, a senior investment manager at Gower Financial Services. We're going to take a look at what has been happening during the third quarter of 2022. And of course, all opinions are personal and no investment advice is being given. Toby, good to see you.
And you, Tony, it's come round again really quick.
And you still got your hair. It hasn't all fallen out. Well, we normally do a review over the last 3 months, but I mean, really, it's just been down, down, and down. So I'd like to start off by asking you about the trigger point for the latest dives. Was it the mini budget?
It's a part of a bigger picture of what's going on. The UK managed to exacerbate things beyond other countries. So bond markets already been going down significantly in the United States, and for the UK, it really we went one further and had a bit of a shocker. The proposals, the tax cuts, are the biggest since 1972, and back then Anthony Barber had this phrase "dash for growth," and I think that there was a good rationale behind this project, because it's based on a principle, the Laffer curve, as opposed to Laffer. The idea is when you cut tax rates to a certain level, there's a sweet spot where a lower tax rate generates more tax revenue. So it's kind of a paradox. You'd think, surely you get more tax by putting up the tax rate. It works the other way. It stimulates growth, and it worked very well in the 80s. But it was so badly communicated that no one got it until, even people like me, it took me a while to figure out what they were doing.
It was badly presented, and markets, of course, don't hang around for explanations, do they?
That's right. It's we saw the long-term UK interest rates on government gilts shoot up to 5%, and there was at one stage a risk of major pension funds imploding. And because they hedged themselves, what was going on was that some of these derivatives were pushing them to make margin calls. So the pensions had to stump up more money at just the wrong time. So they were selling assets into a falling market. So you couldn't make it up, really.
A perfect storm, eh?
It really was. In some ways, hopefully, you think it's a bit of a climactic point where you've got it over with, and then you can start again from here, hopefully.
But do you not think there's this element of incompetence there as far as the government was concerned, in not sort of trying to sort of look at the whole thing and saying, what are the implications?
Indeed, I think part of the good angle was just cutting this 45 pence tax rate, because if you're a professional couple working in the UK, you've got no incentive to do extra hours. Imagine you've got two doctors as partners. There's no point earning more because you lose more allowance. And it really is, it's getting to the stage where you disincentivize people from working, and the ones who pay, it's a Middle England paying a lot of the tax, there's no point for them. So it's almost like it's policy by opinion poll, that as soon as this announcement came out, they kind of scuttled back and did a U-turn. So imagine thinking about Margaret Thatcher would have said, this lady's not returning.
Absolutely. I mean, that would have been her philosophy all the way through. But equally, I think if it had been Margaret Thatcher, she'd have looked at it a little bit more closely before allowing the Chancellor to get on his feet.
Yeah, it was a bit, from the hip, effectively.
I mean, I sympathise with them insofar as obviously we've had the Queen's death, we've had this protracted election process in the Conservative Party. So something had to be done, because people were getting very, very worried and upset about energy prices. But having said that, they didn't refer to the Office of Budget Responsibility, because normally they would come out with a sort of report that would basically confirm that what the government was trying to do was achievable. Is that correct?
I mean, I don't know what the sort of politics are between the departments, but I mean, it was only a 40-page document. It wasn't by government standards, that's pretty slim. and the people at the Office of Budget Responsibility are smart cookies, and they could have had a sort of, could be a good litmus test just to run it by them first of all. So as I say, that there's probably something else going in the background which we don't see, but it would have saved a lot of money for a lot of people if they had.
I mean, we're recording this on the 10th of October, and I hear today that the proposal to do the OBSR report in at the end of November has now been brought forward to the end of October. So that's another half U-turn. Doesn't exactly instill confidence.
It's inauspiciously for Halloween as well. So make of that what you will.
I bet they haven't taken that into account either. But, I mean, looking at the mini budget, okay, so they had to do a U-turn on the 45 pence rate. In terms of keeping corporation rate tax as was, that's got to be a sensible thing to do, isn't it?
That'd be fine if it was a standalone thing, but all kinds of taxes being levied in the background, particularly on some properties and rates.
Yeah.
So, yeah, I mean, it's good to get the public incentivized first, and then some corporates later. So yeah, I see the point.
Bankers' bonuses, always a point of discontent. But
yeah,
you know, I've looked at this, and I've in the past I've thought it was, you know, outrageous that these people should receive that amount of money. But having said that, if you sort of compare them with, say, a professional footballer who's probably on equal earnings, but actually doesn't contribute that much to making a business work, you begin to wonder, don't you?
Yeah, I think that there was I think some years ago now, when governments had bailed out banks, the idea was to cap the bonuses at, I think it's twice salary or something, which was
that's
quite
right,
small compared to the past. The idea is to pay a fairly standard salary, and you'd incentivize the bankers to earn a lot more and get a percentage of growth. So they are effectively being paid a percentage of what they generate. Whether it's generation in a good way or not is another question. But if you think about Premier League clubs, they're kind of the perfect socialist institution because they're paying the workers all the profits.
Yeah, absolutely. I mean, that really works well, doesn't it? Old style cooperatives never had anything on that as a principle of running a business. That's quite true. Yeah.
So I mean, it's always thing about bonuses and incentives. They always have a downside to them, whether it's share options for directors or bonuses for bankers. You've got this kind of hunter or farmer mentality where when a bonus is dangled, you will turn to a hunter and you won't care about the consequences next year. So it's not a great incentive.
Yeah. And of course, I suppose you could argue up to a point it was those sort of bonuses that created the 2008 problem. Very
much so. It's anyone who could, I don't remember what the phrase was, who could leave breath on a mirror was eligible for a mortgage.
Yeah, absolutely.
As long as you're alive.
Well, there we are. So essentially, the UK government are going to borrow an awful lot of money to fund these energy subsidies. That's got to be a good thing, I suppose, for people that have having major problems with their electricity bills. But like everything, it's got to be paid for in the end, hasn't it?
That's right. It's kind of dangerous having this open checkbook approach, because although natural gas has come off quite a bit, crude oil's just been shooting up last week because the OPEC members are going to cut production.
Yeah,
and these things can change very rapidly. So you effectively leaving yourself very open to subsidise these bills, and it does beg the question of how the UK energy market's structured, because in France the electricity prices have hardly increased. They're mostly state-owned, and you just wonder how much is it's a case of gouging the public's eyes out for extra profit. So yeah, I can see why they're doing it. And if you have people not being able to afford food and they're getting cold, then obviously that's a recipe for revolution, really.
Yeah, social unrest. Yeah,
more in Europe particularly. I mean, I'm hearing stories about petrol pumps not having petrol stations not having any fuel in France at the moment, and the nuclear power stations are running on quite low capacity as well. Some aren't working. So I know in the Channel Islands we're supplied by France for our electric, so we might have to turn on our generators.
I think that's a likelihood in Guernsey. As you know, we only have diesel generation in Alderney, so from that point of view, I suppose we're not dependent on a third party to actually provide the power, but there we are. I read somewhere, and I think politicians have been plugging it away, that the UK debt ratio is lowest in the G7.
I think it's about second lowest, but it is. It's the third lower than the average across the G7. But I think the thing to remember is that the UK is the only economy that hasn't got back to pre-COVID levels.
Yeah.
So it's what you really want to do is you want to be growing the economy more and more to get greater tax revenues. Again, going back to the mini budget again, you can see the rationale for trying to kickstart the UK back into life. They're all horrendous numbers. I mean, the 2021 figure was, I think, in the 80% region, but everyone's going to 100% and beyond. And this is normally considered the trigger point, because when your debt is the same size as the economy, if interest rates go up, all of a sudden you're having large chunks of expenditure going on interest. So
that's the problem, isn't it? And I mean, they're talking about interest rate, or rather interest payments, being comparable to government departments in terms of annual expenditure.
It's incredible.
It's a crazy situation. And of course, sterling is very weak at the moment. Did you think it would hit parity with the dollar, or?
Not yet. I mean, it could easily go there, but it kind of reminds a bit of, but people might tend to extrapolate when things get to extremes, whether it's to climate ideas. And it's human nature just to take it too far. So for the time being, I mean, the pound looks like it's got it's about where it should be against the dollar and euro. But you also remember the old phrase from the late 60s, I think it was Jim Callahan said, the pound in your pocket is still the same.
It was Harold Wilson. And I remember him saying
Callahan was, I think it was treasurer.
Callahan was the Chancellor.
Chancellor.
Wilson was the Prime Minister, and Wilson actually made this speech. Oh, it's a broadcast, I think. And he said, remember, the pound in your pocket won't be affected. Because we didn't know any better, we thought that was correct. But of course, it was a devaluation, wasn't it? So
pure semantics. It's also a bit like the mid 80s when you had the dollar had gone up 50% in 5 years because their interest rates were so high. And so they had a meeting at the Plaza Hotel in New York and had the Plaza Accord. And after that, everyone had to act in concert to devalue the dollar, which went down by 50% over the next 2 years. So massive swings in currencies, and it set off a bubble in Japan, which still hasn't recovered from. So often these short-term moves create, major long-term ructions, which it's also done in haste, and we just end up reacting to one thing after another in a continuous wave of crises.
As part of the process of trying to stabilise the markets, the Bank of England said that they would grant a facility to the government, but isn't that printing money again?
In this case, they really had to, because the pension funds were facing obliteration with the sort of losses on the bond holdings. So it's one of those cases where you just got to intervene, otherwise a lot of people are going to potentially lose their pensions.
Is this sort of situation, though, where you grant a facility, which of course means the money's there, but you don't necessarily draw on it, is that comparable with quantitative easing?
If it's short term, it's not so bad. I think that the initial time frame was 2 weeks, which is now over. I think if it is left open too long, just get every excuse to use it again and again. And in this case, I think it was just used to calm things down a bit. Because it just gone too far too quick, and it was the right thing to do. As long as you put up, everyone talks about things being temporary. That in government circles that means permanent, but hopefully it won't be abused.
Well, whilst talking about the Bank of England, excuse me, were they too slow in terms of bringing interest rates up? If you sort of compare them with the Fed in the States, they didn't seem to do much for a while.
Yeah, I think it's easy to be wise in hindsight, but the forecasting, and also the bond market forecasts, which is where you got all the so-called expertise, were expecting inflation to fall back to 2% in the coming years as well. So they were kind of feeding off each other to an extent.
Yeah.
But ideally, yes, it would have been better. Would have maybe avoided that kind of panic we've just seen. But the Federal Reserve in the United States lead the world, so they're bound to be first. Perhaps we could have piggybacked, a bit more promptly.
Yeah, and of course, the whole thing's hitting mortgage interest rates, isn't it? And
Yes.
we're now talking about 6% or thereabouts, which in a lot of cases means people are going to be really stretched.
Yeah, absolutely. I mean, they're probably stretched in the first place as getting the mortgage, with all the multiples and the rates available, because housing is so overpriced. And I think in the States the rate is now 7%, because they base their interest off the long-term rates, the bond yields. So that means the kind of the conveyor belt of economic activity is kind of really slowed down in terms of new housing, and that feeds onto lots of other spin-off areas as well. So it all points to a fairly chunky slowdown. If your mortgage rates are too high, everyone's the mortgage has their income really cut back because they're paying out on this debt, and it leaves less room for other things as well, just at the time when inflation's kicking in. So again, I think keep using the phrase perfect storm, but this does look like it.
Yeah. Gold, that declined for a while, which was surprising, I thought, but then it stabilized.
It was it's been relatively stable. I mean, most people, certainly here, were quite happy because gold is priced in dollars, so it did provide some protection. Probably the only thing it didn't fall, but yeah, it keeps on disappointing. But I think that the old saying that gold's a good inflation hedge isn't necessarily true. When you look at the data going back a long way, gold and gold mining shares perform very well in recessions, which you wouldn't expect. But so I think going forward, it's a pretty good asset to have.
In your professional opinion, are we in a bear market now?
We're already in there. So bear market is when equities fall by 20%. The UK has been an exception because of the type of shares that are on the index. But in the US, you've had the main S&P 500 index off 20%, NASDAQ technology shares off 30%. So yeah, we're already there effectively. Whether that's in the use of future, I'm not sure, because normally when a bear market is announced, that's normally the end of it, and the markets start to rally. But this time, it's very hard to see what the trigger is going to be for a recovery. I mean, typically for 12 months after you get these major sell-offs, you get really big rally in the stock markets. But this time, the first time I can remember, I'm just not feeling it. I can't see it happening.
So, from your point of view, you just have to go with it, I suppose, up to a point. You can't just work on the basis of selling everything, turning it into cash or anything like that. I mean, a loss isn't a loss until it crystallizes, is it?
Yeah, I mean, in some ways, there are times when it's best to cut something out when it's gone down. It doesn't have a chance of recovery. Maybe for individual shares, that's the case, but for whole markets, you've got funds like mutual funds. It's probably worth bearing with those and running with it. Also, you've got a sort of disjoint between growth and value type of investments.
Yeah.
So in this environment, probably traditional value shares will likely do better than the growth shares, which have been shooting up for years and years. So yeah, it's.
Are we into stagflation?
Again, like there's a bear market example, we're kind of already there, because stagflation is a combination of stagnation economically and inflation. Normally kind of associate inflation with growth and lots of demand. This time around, inflation comes from supply issues and high energy prices. But at the same time, the economy is not doing much. So yeah, we're kind of there already, back to the 70s effectively, albeit it's very different circumstances.
Are you able to draw a direct parallel with 2008 here?
Perhaps in future, the I think for 2008, this was what was kind of teetering was the banking system.
Yeah.
Because they'd lent so much money out, and they'd thought they'd spun off all their mortgage debt into these alternative investments, but they came home to roost. This time round, banks hold their reserves in government bonds, and bonds are meant to be safe.
Yeah,
this year has been just the worst performance. I think it's probably the worst performance since 1946. For UK gilts, we at one point were down 30%, 30%. It's just an incredible sell-off, and that means that because banks kind of because the way they lend out far more than they have in reserves. Just the way banking has always worked. So it's a bit like sort of balancing on a brick, and it just takes a bit of instability to the foundation, and the whole thing topples over. So for the European banks, the decline in bond prices is very serious, and I'm sure lots being covered up at the moment in terms of who's at risk or not. But we saw Credit Suisse have some wobbles last week when people use things called credit default swaps for hedging company risk, and these shot up in price, meaning that something was amiss over there. So if Credit Suisse can wobble, then the mainstream European banks can as well. So this has all kinds of implications for pension funds, the banking system. So I'd say yes, the potential's there for a 2008. In theory, the banks are more stable this time around, but these kind of losses on bonds you can't hide from.
I mean, you just wonder whether the whole thing's going to blow up one day completely, back to 1929 and the Wall Street crash and everything else. Yeah,
I mean, moving forward from that, after the Second World War, obviously the debt GDP ratios we were talking about were in excess of 200%, maybe 250%. And so what they did was that they did have a reset of the bond market. And the idea was that the way to get rid of this debt is dissolve it slowly over time.
Yeah.
There's one economist called Russell Napier who describes this as stealing from old people slowly. Devaluing savings.
Thanks, Russ.
We got government debt gets whittled away, but people's money gets destroyed in the process.
Yes, that's right.
So after World War II, you had financial repression where the government set the bond yield. That wasn't allowed to go up, but inflation was allowed to creep above it. Yeah. So it's a very slow sort of whittling away process is the best way to say it. So I think something else will come like that in future. What form it takes, I'm not sure, but there's a lot of work being done by central banks on new digital currencies,
right?
Which has me a little bit worried because it means that there could be a lot more control about the way you spend your money and what you spend it on.
Yeah.
So there could be a trade-off where they say, okay, we're going to wipe the slate clean, but in return, we've got this new system which is fantastic. Lots of euphemisms, but the danger is that this comes in step with a kind of social credit score like China. Then ultimately, if you can't have cash, you've got no way out of the system. And if you're a good little boy and do as you're told, you'll get your allowance, your like rationing of money. And if you're naughty, then you're stateless effectively. So whenever the government comes bearing gifts,
yes, beware of. Let's take a look at a few domestic situations. I was listening the other day to a radio program, and they were saying that John Lewis lost £100 million in their latest set of accounts. Even for a company of that size, that's a lot of money to lose. And I just wonder whether they're going the same way as Debenhams went.
I think that their brands are pretty strong, and they've got some bonus system for employees, and it wasn't like a sort of a pension fund being ravaged and being cut apart by private equity. So it's I think it's a better model than some of these well-known examples that have fallen apart. Again, they quoted themselves. Depends how you talk about the accounts. In their annual report, they said the loss was only 27 million if it wasn't for taxes and bonuses. Depends how you spin it. But these businesses, our feeling, the pinch mentioned before about rates and indirect taxes going up, and it's like anything. The more you try and lump taxes on these businesses, the more you push things online and away from the high street. And again, it's just kind of this death roll where government or local authority response is always to put taxes up, always to take another death by 1,000 cuts.
But ultimately killing the golden goose, aren't they?
Exactly.
Yeah.
And
I was interested to also see how the supermarkets are doing, because Aldi have now gone above Morrison's in terms of the top 5. And the difference between an Aldi shopping basket at £75, same shopping basket with Waitrose, £95. It's incredible, isn't it?
Amazing difference is that small. If you go to Waitrose, everything costs a £5. It's like, oh my god! It's
a bit like the penny bazaar, except these days it's a £5 bazaar sort of thing.
It is. It can be a bit of a shocker. Now, also, we don't have Aldi in the Channel Islands unless Jersey has a branch. I don't know, but it will. That trend does seem to be going towards the cut price supermarkets for sure. I mean, I know Aldi just nudged ahead of Morrison's by a small fraction.
Yeah, sure.
Always vying for these percentage figures.
Yeah.
That's the way of the world, and there will be a place for Waitrose and quality items. Certainly for the majority of people, they just got to make so many savings that they'll just gravitate to what's cheapest.
Well, of course they are. Yeah, human nature being how it is, sort of thing.
Quality doesn't always go hand in hand.
Talking about Aldi being a German company, were you surprised at that Porsche IPO falling below par virtually as soon as trading started? Was it bad timing or what?
Kind of surprised at the timing anyway. Right? These things are having to be planned a long way in advance. So for Porsche to do an IPO, initial public offering now after a year like this is surprising. But then again, they might think, well, perhaps the trend is going away from vehicles. I know they've got the electric versions. It might be a way for Volkswagen to release value as well by having this.
I mean, VW is the beneficiary on this, isn't it? So possibly it sort of pulls in some liquidity that they want at this time. But I've never been too impressed with car shares. I mean, I know some people that bought some in Lotus many years ago.
Okay.
And of course, it just sort of went.
And
they bought it because they thought Lotus cars were good, but the actual financial background to it didn't add up at all. But there we are.
So again, it's a bit like football teams, isn't it?
Yeah, very much so. Yeah. It's just,
you love them, but don't do it for the money.
You just chuck the money in and watch it burn or sink or whatever. Anyway, I must ask you finally, Toby, hopes for the Q4. Do you think we'll see a bit of stability coming in, or what? Not given the way it started off. I mean, you've had the escalation in Ukraine, this bridge to Crimea being bombed. I mean, that really has poked the hornet's nest. And I think you've had these intercontinental ballistic missiles being paraded in front of the American embassy. I mean, it just all seems to be going towards escalation. There's no doves or anyone prepared to compromise, and whether it's the IRA or the Taliban, at some point you have to get around and talk and see it from the table and sort it out,
and see it from the Russian point of view as well, because NATO has been parking on their doorstep in spite of the Minsk agreement many years ago, and it's a bit like someone, the school bully poking someone, and when they hit back, it's like, oh, look at what they've done. So I always try and see things from other people's point of view, but the censorship is so strong, you won't hear what Russians feel. And Putin, he's a moderate compared to some of the people around him.
Well, apparently so, and that's scary, isn't it?
Yeah, and not trying to be this kind of situation. Before the Second World War, you're trying to appease these people, but at the same time, there must be some kind of discourse or some way out. Because I mean, my older son's in the military, he'd be more than happy to go to war. But for many of the people who are promoting greater conflict, will you see their kids?
Well, that's right.
Sent to the front.
Absolutely.
Like the Vietnam era.
Yeah.
Other people's kids, or other people are easy to sacrifice compared to your own kith and kin sometimes.
Yeah.
So,
bit of a dismal way to finish our chat.
Yeah, I mean, it often these things turn when you least expect them, and it's always the way. And when you feel the most negatives, kind of, it's the point at which everyone's sold.
Yes,
you've had peak panic, and buyers will come in. I mean, one sort of I call it silver lining because it was about silver. At one point last week, we saw silver spike up by 7% in one day, and gold popped up a bit as well. But it just gives you a feeling that there is sort of risk on money out there, which will take advantage. And it's always the way that things will start to rise and no one believes it. So you've got the hedge funds going in, they're first buyers, and people are just too reticent to do anything. Then it gets to a stage where you can't just sit in cash, you've got to go in, and eventually it comes back. So that's the way the human psychology works. From my point of view, even as a bit of a financial history buff, I'm struggling to see a parallel for what's happening now, because all these other events like post-Second World War, 1970s, are very different backgrounds to now. And it's a bit like a kaleidoscope. You just keep twisting it, and it just comes out in ways you never expect. So for me personally, for our clients, we're staying invested, and because the alternatives is staying cash and definitely get devalued. Whereas at least with invested, you've got a chance of making some of it back up and hopefully move on after this.
Toby, as ever, it's been a great pleasure to talk to you. Thank you very much. I'm not over depressed because I've seen these things happen, not exactly like the current situation, but I've seen these things happen fairly regularly in the past, and somehow, as you say, it all sort of starts all over again.
Yep. Roll on the next crisis.
Thanks ever so.
Thanks, Tony. Good to speak to you.
Bye for now. Cheers.
Bye.